This Saturday on 8th November, double the insights, double the growth. By 11 a.m., we have group health cover versus personal policy. Why you need both. Know why you need both the insurance to keep your family protected. At 12 p.m. IST and 10:30 a.m. GST, we have smarter wealth creation for NRIs. Learn how to make your money work beyond borders. Link in description. Join this webinar to make your weekend an actual learning weekend.
Welcome back to another video for Ithought Connect. And today we will discuss something very interesting that's been doing the rounds, PMS against AIF against SIF. We all are well aware that India's investment scenario is now expanding like never before. And investors today are far more informed and ambitious, looking for avenues that can take them beyond the traditional investment routes. This shift has given rise to multiple structured investment options. We are all very aware of the PMS route, the portfolio management services route, alternative investment funds, AIFs as we know it, and the newest entrant, the specialized investment fund, which is SIF. Each caters to a different kind of investor, but all of it shares a common goal, smarter wealth creation, of course. Now let's understand how they differ. Before we get into that, we all know that mutual funds are the foundation for most investors. Why? Because they're accessible, transparent, and heavily regulated. And they're ideal for retail participants who prefer simplicity. But now let's look at these other tools that have been doing the rounds for a while. First, we have portfolio management services, or PMS, which is built for investors who want professional, goal-linked, and individually managed portfolios. Here, the minimum investment starts at 50 lakh rupees. And every investor owns a separate portfolio managed specifically according to their objectives and risk appetite. The strategies can be equity-focused, thematic, or multi-asset, and decisions are often tailor-made. Liquidity, however, is lower than that of mutual funds since PMS portfolios are built with a medium to long-term horizon. And this service suits affluent investors who prioritize customization, transparency, and active management. Now, on the other end of the spectrum, we have alternative investment funds, or AIFs, the high-risk, high-reward arena. AIFs pool money from investors to invest in unconventional opportunities like private equity, real estate, venture capital, or even hedge-style strategies. The minimum ticket size here is 1 crore, making them exclusive to HNIs or high net worth individuals or institutions. AIFs can deliver outsized returns, but they also do come with higher volatility, lesser liquidity, and longer locking periods. They're ideal for those investors willing to take such concentrated bets in niche markets. Now, sitting right in between these two is something that we know as SIF, or Specialized Investment Fund. Introduced by the SEBI, SIFs were created to bridge that growing gap between the accessibility of the traditional investment routes and AIFs' exclusivity. With a minimum investment of 10 lakhs, SIFs open the door for experienced investors looking for sophistication without committing crores. They can invest across equities, debt, hybrid strategies, or even unlisted securities and structured instruments, but with tighter regulatory oversight and transparency. The liquidity, of course, sits in the middle too, not daily like mutual funds, but not locked away for years either. Depending on the fund, investors can redeem within about 15 working days. In short, if you look at the spectrum, mutual funds start around as low as a 500 rupee investment, highly liquid but standardized. PMS starts at 50 lakhs, offering personalization and active management. AIFs begin at 1 crore, offering niche strategies with longer lock-ins. And of course, SIFs now fill the middle, starting at 10 lakh, blending flexibility with structure. So how can we help you? Where do you go from here? At Ithought, we've always believed that while innovation keeps expanding options, the essence of good investing, of course, lies in personalization, discipline, and trust, irrespective of your investment route. And it continues to stand out because every portfolio we build is designed around you, your goals, your values, and your milestones. Our approach goes beyond performance numbers. It's about creating that conviction and clarity for you as investors. We focus on building enduring wealth through thoughtful asset allocation, quality stock selection, and a philosophy rooted in long-term thinking. Whether markets evolve with new structures like SIFs or more complex AIFs, our core remains the same: managing your money with maturity, purpose, and understanding of your requirements. So at Ithought, we don't just manage portfolios, we build partnerships that grow with time. And in a world full of ever-changing investment products and landscapes, that personal touch will always be your greatest differentiator. So if you would like to understand more about this and get in touch with us, please use the contact on your screen and we will be very happy to guide you.